All right, welcome to the Closing Beat special edition from the office. I'm actually out of town tonight. I got invited to the hockey game, and I never go to a hockey game. I thought, well, I can't let you invite me to a suite and enjoy food and drinks all night while watching hockey. So preseason game, looking forward to it, and I didn't want to leave you guys hanging. By the way, this is where we do the office trades for the most part. So if you're familiar with our research site, it's $13 a month. It's a subscription. You can find it on jazzwealth.com/research. And we do the short-term trading and just kind of have fun with things like that while we're, talking about ideas around the office. And usually I'll just film it here to give you guys an update, and no holds barred. We show everything, that happens, good or bad. And all of the proceeds actually go to support Drum Corps International. So it's a really impressive kind of sport that I like to support with those kids. And it's off season, so we thought, well, let's get back to doing some office trades. But here we're talking about the stock market. Thank you for watching. We are financial advisors at Jazz Wealth. Hope you'll schedule a call. Everybody can have a financial advisor. You can actually see right on our website our fees, what it costs to work with us, and super competitive, by the way. But feel free to schedule a call or whatever. Haley, Chris, or Eric, someone will reach out to you and give you guys a little chat. If we're not a good fit, we'll send you hopefully in the right direction. Anyways, let's go to the stock market here today. It is technically still open while we're doing this, but my issue with the S&P is where we're at, right? There's no real catalyst for us to suggest that this rally is going to just extend itself even further. Obviously, everything is very much intact and it's fine in an uptrend, but for a day-to-day decision maker, if you're looking to invest more into your 401k or you've had some cash on the side, in your IRA or whatever, and you're like, I want to put it to work at some point, where's the motivation to do it today or even really yesterday? You know what I mean? It's like, I think I'm going to sit on my hands and wait. Also, if you look at the S&P, as a whole, we like to share often the, I'll just share it with you here, the percentage of stocks that are overbought and oversold in the S&P. Now, we're looking back a whole year, and we know that when the S&P rises, because a lot of stocks in the S&P go up together, not just tech or not just communication services or financials, but if all the stocks and all the sectors have a rapid rally, we know that that's not a long-lived thing, right? The market does not like to have a large percentage of its stocks considered overbought. And so where we're standing right now is we've had this rally, not tech-driven, surprisingly, but we've had this rally with not every stock lifting the tide. Right now, we've got some action from some of the international side of our market. We've got some action from the utilities area, which is not going to lift the market, but it certainly helps hold things in place. So we have the currently 48% of the stocks in the S&P considered overbought. That's your sweet spot. That's where you don't know if they're going to wake up and take off and something exciting happens, or they're all going to take a break, or some of them take a break. Awesome. Well, on the other side of that, we have 5% of the stocks considered oversold, meaning they fall into an area where it's just overdone for them relative to themselves throughout history. So we like to look at that as well. What it tells you is there's not a lot of opportunity, right? And we don't know necessarily what the next move is going to be. There's no clear outcome of what the next move is going to be. So what do we do there, right? Let me get rid of that for you. So that's out of the way. And so we go back into the market here and say, well, all right, make me do something. Give me a reason to do something. And that's where we stand with the S&P. With the NASDAQ here, you got a very similar picture. And all of a sudden, notice it's not trading up here at highs. The NASDAQ, very tech-driven, hasn't had a lot of tech-driven rally to go on. In fact, if we look at just the tech sector, really nothing, right? You see that weakening kind of a pattern. So if we go to the S&P real quick, right, just to be really elementary about this here, we got a series of higher lows and higher highs. We're just trading at all-time highs. Well, is it the tech sector that's doing it? No, we don't have we have a series of higher lows and one brief little moment at a temporary higher high, but not back at all-time highs. So we're really looking for leadership from the tech sector if you want to kind of break it down in that way. All right, looking at the Dow, pretty much a flat day. Same concept here. I don't know, it's an honest answer. I don't know what to do. There's no real reason to put money to work. I'm not going to mess around there. It's a sit on your hands type of environment. The Russell 2000 is going to be in the same position. I would argue, and small caps are kind of my fun spot, but I would argue that you could look inside the Russell and start to maybe peel apart financials. And if you like the healthcare stuff, you could look in there as well. If you're a small cap, if you're not a small cap index type investor. All right, we're looking over at bonds. We got rates moving a little bit higher here. Remember, prices moving lower, rates moving higher. So the outlook on that low interest rate environment is sort of paused for the moment, waiting for more clarity from the Fed. And that's the same whether it's short-term or long-term bonds. The VIX retreating just a little bit. I saw a handful of you saying, hey, maybe I'll bet on it going down. It's not my game, but today you are sort of happy with what's going on there. And then I want to point out, let's do gold real quick, just a 0.5% lower. I'll make the same comment there. Gold, what do you do? You don't want to chase it in here. And remember, gold goes in fits and starts. So it's a very, very obvious commodity because it has these rallies that make you think you're going to miss something. And if you got in early, great. But if not, you're sitting around waiting. Then it has these rallies. And well, now I'm going to get in, right? Oh, the dollar and everything going on around the world. Yeah, okay, gold. But you might fall right back into the trap of it just moving sideways. Lastly, we'll take a look at oil here. Oil, there, let's just zoom in. This is too much here. There you go. Another little 0.5% gain here. This is all the Middle East sort of issue that's going on there. But I'd like to point out, the people that ask questions, oil, I should get in oil, man. They're going to bomb everybody. It's never ending back and forth and Iran and blah, blah, blah. I get it. Should you do anything? Well, remember when this latest wave started last October, the original attack on Israel, where they coming in with the paragliders and stuff. So when that happened, since then, oil has actually been pretty calm, right? Like, there's not much to go on. Like here's October, right, when that kind of started. But if you were an investor there, yeah, sure, like right now it's up like over 6% since the close on Monday there, but it's down 16% since this all started. Since the end of the second quarter, actually, it's down 10% there. So be careful with the perception that a news-driven event will generate profits for you, or a news-driven event means that somehow this is now more attractive in the midterm to long term, right? In the short term, of course, volatility, if you want to trade and be that guy or girl, yeah, go ahead, have at it. But news-driven events only temporarily affect a stock, a commodity, or whatever. The fundamentals of it, the supply and demand in this case for oil, is what affects the actual outcome. Well, we have those oil inventory numbers showing that, well, demand is not exciting and it's not bad. It's just, there's nothing there, right? But we still have a lot of supply coming to the market. So for the moment, oil, you'll notice, well, hey, it has not done so well since if you use news as your barometer to decide whether you're going to invest or not. A couple stocks in the news here today. We'll talk about Cal-Maine. We happen to own it, so I'm happy to see that sitting up new highs there. And congratulations if you're with us. They have declared the dividend's actually going to be $1.02, so a little bit more than expected there. And they make eggs. They do eggs. Like when you think, by the way, this is like a real dad thing to say here, but when you think, or your kid has a business idea or something, and you think, well, that's just silly. Why would you do something as basic as selling toilet paper? Don't stop that, right? They sell eggs. That's just what they do. So I just thought that was kind of impressive. Let's do this one then. Lamb Weston. These guys haven't done so well. They do French fries. This is the potato king of the planet, right? So we got eggs and we got potatoes, like huge company here. Anyways, they want to make more money. So they're going to close a plant. They're going to lay off some people. That's going to save them about $55 million. Sucks for the worker, but as you can see today, obviously it's good for the stock there. And remember, they telegraphed this about 2 months ago. Remember, we talked about this when their earnings, actually, their last earnings report, they said, unfortunately, restaurants are charging too much, and that's starting to take away from the overall demand, meaning these guys aren't selling as many French fries to the restaurants because the restaurants had to raise their prices. These guys think, oh, you raised the prices too much. Now people don't want our product. So there was that sort of maybe a little bit of a heads up where they're like, well, then we're going to make less. If we're going to make less, we don't need as many people here to make the French fries, package them, deliver them, and all that stuff. Hence, they're not restructuring, but their efforts to lower their costs a little bit until that demand picks up. Humana is in the news here today. So for Humana, the Medicare quality ratings, this is actually a trick. If you read an article or see it on TV, the Medicare quality ratings for them, unfortunately, the number of participants in the higher quality plans actually went down, right? But it's a trick because the plan, one of the plans that Humana had, got a lower rating. Right? It was initially a better quality plan. It gets a lower rating, which means there's more people in that now. They were already there, right? And that hits the stock. And I think this must have come out yesterday a little bit. Somebody figured it out or something. It kind of hit the news wires today, but And then in the, I'm just going to pick on competitors here a little bit. If you're familiar with LPL Financial, they are a huge investment advisory business. They got their fingers in just about everything. If you are in the financial advisory space, you know who they are. They're that big. Their CEO's getting let go for a little inappropriate behavior there, maybe saying some things around the office that he shouldn't have said. So, I'm going to pick on the other. You pick on your competitors, right? We want everybody to do well, but you go, gotcha. Oh, man. Hey, anyways, tomorrow you've got Constellation Brands will be reporting. That's really it. This is kind of what they call off-cycle earnings reports. Just not in the thick of it. We've got the financials kicking things off here very quickly, I believe late next week. So earnings season will get back underway. And then tomorrow, you only have one Fed president speaking. And so today we had 4 of them. Not really anything gangbusters to go on there. And so that leaves everybody to focus on the VP debate, right? That just happened. No. Anyways, I appreciate you guys watching. Wanted to get in here and do something for you. By the way, if this is all a little too much, you want to learn the basics, go to Haley's channel. It's at dostraight.com, DOHSTR8. She covers the basics and gets you up to speed so that you can come hang out with us over here as you learn more and more. All right, that's all I got. I got to go see what a hockey game's all about, huh?